Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 11th, 2023. I am Frank Ochoa, aka PivotBoss. Following the previous session here, we saw a failed new low develop. That failed new low hit just above the previous week's low. By the end of the day, we had a V-bottom reversal and a close price back toward the open. A big-time reaction, not quite as strong as it could have been for a couple of reasons. Number one, there was no range expansion to the downside, so there was no range expansion or failed range expansion from that perspective. Secondly, this is a reversal that kept price within a very narrow range here. So this yesterday could just very well be trading range action, and today's failed new high could lead us back to the midpoint and perhaps even back to the bottom of the previous day's range. So we could still be stuck within this range right now. And that range is developing energy right here. I mean, this is a 6-day developing range now, and the energy being built here is 180 to 200 points in potential range up ahead. So once we do get expansion, it could be significant. But keep an eye on the previous session's high close combo. If that area continues to be rejected, you're going to see a move back toward the midpoint, and beyond there you start to open up the bottom of the previous day's range. So that's going to be right now the bearish outlook here if price cannot hang on to the previous session's close. If we take a look here at the NQ, you'll notice the NQ also pushed through the previous highs here. A bit of a failure as price is working back down. Previous session here, another great reversal intraday. By the end of the day, a good V-bottom reversal, but again, the NQ fell just shy of the previous week's low and didn't get a firm breakdown or breakout to the downside at all. Instead, turning higher off that lower support level and rallying back toward 2 to 3 day highs. We're still stuck in a developing narrow range here over the course of the 5 days. That again is building some significant energy to the tune of perhaps 800 to 1,000 points of range up ahead. But right now, the failure to get through the previous session's high and close opens up the potential for a test at the midpoint. And if bulls can't defend that midpoint, you start to open up some weakness back within the range. All right, let's take a look here at crude oil. Now, crude oil continues to trade again around that 80.5 level. You see again today's highs, 80.5, yesterday's midpoints, 80.5, same thing across the board. It's traded a little above and a little below that level each and every day to begin the new quarter of trading. Right now you're seeing the high end of the day's range at that level and now testing into the lower portion of the range. Are we going to see a breakout from this range? If we do see a breakdown, you likely see price pick up some steam. And it'll be interesting to see, does it continue to hold those losses? Because if so, that could be a precursor here to filling the gap back down and perhaps returning back toward the previous month's midpoint. So again, keeping an eye on this range here, not expecting a breakout, true on breakout just yet, but once that does happen, we could be looking at a fill of the gap with a continuation back down. All right, let's take a look here at gold futures. Gold right now having trouble here with prices above 2020. That level right there, you had one doji-like bar up here, price pushed back down, now holding here and staying inside the bullish Pima trigger zone right now. But again, we're getting into the point of this chart here where price does not tend to last long before you see a snapback of some sort. If you look back over the last 5 years, from here up, that's only been traded a handful of times here into that 2078.80 level, which was last year's high, and as high as almost 2100 a couple of years before that. So again, this is going to be an important spot here to see if price can either maintain acceptance up here and try for a breakout, or what is more likely is eventually this thing kind of petering out a bit and then returning back down. First to value, year-to-date value here at about 1920. That's also the midpoint of the previous month. And then if you return to the previous year's close, 1830, that's support right now and has been a very, very magnetic level here for gold. So if we start to fail here, we're likely looking at a quick return to this price here, 1920, followed by 1830 up ahead. All right, lastly, taking a look here at the YM. The YM with a range of just 96 points right here to begin the day. Very, very modest range. Again, this one has had a very narrow multi-day range that has developed over the last 5 to 6 days. This is now a 7th developing day. Today's range super tiny. It's only been averaging 300 points per day as it is over the last 10 sessions, and now that average is nosediving as the last 5 sessions are averaging 268 points a day. So right now you have obviously a narrow range after strength. So as we've mentioned before, if we can get a strong failed new low, that could catapult things up toward 35.5. At the moment, we're not seeing any kind of move to the edge at all. So we'll see if things start to pick up. Inflation data comes out prior to the RTH Open Wednesday. So tomorrow morning we'll have inflation data and additional economic data points that come out throughout the week that could begin to spark some expansion from these ranges. Given the uptrend, again, any selling pressure, you look for bulls to defend that, develop a rejection, and look to slingshot this thing the other way. Failure to hold, 33.3 opens up a return that takes you back down to recent lows. So important zone here as this thing builds energy for a move to come. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.